Yo, what's up, guys? It's Goose from the Wise Wealth Discord coming at you live on a Monday morning. Just want to go over a few stocks with you. Let me make sure this is still going. So I can make this smaller. Okay. Yeah, it's been. Oh, that's crazy. It's the last few times I've tried to upload on Sundays. For some reason, it's just like not uploading the screen. So like it'll show this, but then when I go to switch to the screen and like upload it, it's completely blank. It just has my voice over it, and I feel like my voice doesn't really help many people. No one really wants to sit there and listen to my voice. So I've been trying to work on it, especially get like the settings a lot more refined so it could be a lot more clear. I want some intro videos and intro sounds and whatever it is, the hoo ha's. So bear with me as I try and make it a little bit nicer and cleaner for you guys on these watch lists. I always usually start with the spy. I just kind of wanted to give you guys a little bit of technical analysis. Nothing really crazy last week happened. I don't even know what the full move was over the week, but it really wasn't anything drastic. The SPY is still hanging around the resistance level that I was speaking of last week. I did last second try and push up above it, which right now the 52-week high should be 459.65. So it went up about 459, touched 52-week highs. I think it was in what, July? Yeah, July area of this year was our highest point for the SPY, and I believe the Qs as well. Qs has broken above it. They got to 393, 394.14 in November when that huge push happened. So things that I'm looking at, because we're starting to see resistance. I know volume, it seemed like it was kind of slowing down a little bit. They did pick it up last week, and they were continuing to buy dips. So that's a pretty good thing to see for the SPY in a bullish case. We had that range as well that I was plotting out because we were reaching the resistance points. But when you start to see a range, then you could see that there's either accumulation or distribution, and those are when we're going sideways action. It just continues to sell or buy or whatever you want to call it. And when it goes sideways, people don't know if it's accumulation or distribution. People are either distributing their stocks at the points or they're accumulating at every low point, and that's what's building the momentum. So sideways, when I say consolidation, it typically is accumulation or distribution, and you have to wait until it breaks above either the supply or the demand zone to use that liquidity to move forward or to move down. And it's like I said, we're still kind of at resistance right here. I know I have a line right here that's kind of where the bottom of the supply demand zone that I'm speaking of, support resistance. So I'm still just watching this point right here. As you can see, it's wicked twice. It's got that first wick and it's got that second wick right there. So as of right now, it still hasn't really broken. It made a new high on the SPY, and there's obviously resistance there because you had almost a touch there, touch there, touch there. You have one, two, three, four, five. This is the 4 hour time frame, so it's a pretty big trend as you can see. It just has struggles with this, and it's like obviously if it could break above this and retest it, all time highs is very very close. So it's like, are we gonna get there before the end of the year? Possibly. December, first couple weeks in December usually are weak, and then we usually wrap it out with a pretty good push. December's can be flat too, so with this point of resistance, it's hard to tell. Obviously, you still want to wait to see if it does break above. This is the S&P 500 again, so that's like broad-based index. So if S&P 500 is climbing, then most stocks are going to be climbing. It's like that V-shaped recovery is pretty crazy. Like you start breaking below support that they had, and then boom, next thing you know, you're up 12% from those in the matter of, you know, you could measure it with this, I guess, but this was October 30th, like the last day in October. It says 47, 36 days in 4 hours. That's 12% is crazy. Usually, like a year's gain is about 8%. So 12% is actually pretty good there with the V-shaped recovery. And that's my only concern is you start to see these RSIs, you start to see them getting really overbought. And then as of until last week, the volume was kind of declining a little bit. Jimmy had mentioned that last 2 weeks ago where was Thanksgiving's holiday season. That's obviously going to be like a less volume week or days and times when vacations come, people travel, less investors, focusing on those things. So maybe as we wrap up the year, we might see a little bit more volume, but it's the high RSI, it's certain resistances that you're seeing at some of these mega caps that are making me feel like we're coming to a slowing down point. Last week we did have a breakout of this accumulation, or I guess it'd be distribution, but consolidation is what we would call it. It breaks out, it's come back, it comes back, and then I saw the retest, and it's like when it couldn't get back up in there, that was slightly concerning for me. So I don't know. I'm still not convinced that I want to lean bullish here. I'm not convinced that I want to lean bearish, but I'm more on the bearish side just because of the things like with the RSI and resistances. It seems like we're getting to that topping point, but like I said, if we could, because the Qs already broke above their highs, and that kind of was their retest. They might have grabbed some liquidity there with that breakout, and it seems like they're still trying to push it higher. The one thing that I did mention though is that there's rotation happening. So when I start to show you the cues, and you could see that the all-time highs is right here. The SPY all-time highs is up here. So smart money usually, you know, buys down here, sells up here. You buy low, sell high. So when you start to see it getting to those highest points, those are typically topping points. There's not really much resistance past all time highs, but also it's like how high can we really go with a possible pending recession? We haven't quite seen, you know, this type of rate hikes in a very long time. So it's like it's still speculative. No one really knows exactly if it's going to be a soft landing, no landing, hard landing when it comes to the effects of the federal interest rate. But the stock market, you could still continue to play these levels. And typically, I think you have to put two and two together. You have to speculate a little bit with what the Federal Reserve is doing and then what stocks are doing, because the stocks are not directly correlated with the economy. There's a lot of different like variables and a lot more emotions when it comes to the economic numbers versus the stock market. So right now we're kind of in that phase where we're getting euphoric, and we're starting to feel like there could potentially be a soft landing. So technical analysis is bringing us right up to all-time highs or bringing us to double tops on the SPY, and I don't know. My speculation and my side is that I don't think that a soft landing will happen. I think later in 2024 we'll start to see a possible slowdown. This week we do get job numbers. We get unemployment, and then I think initial jobless claims, and then unemployment. I believe was where is it? ADP. Oh yeah, U.S. unemployment rate Friday, and then Thursday we have initial jobless claims. So it's like data's going to continue to come through. I don't think it, because I'm not saying this is 2008 financial crisis, but June June of 2007 was when they started increasing, was their final rate hike increase. And then it wasn't until later on in 2008, obviously, when the huge financial crisis happened. So typically, what you see is when crashes happen after interest rates rise, it's usually on average about to a year to like a year and a half from the last interest rate hike to the point to where we're actually in a bona fide recession, because it takes time to start seeing these things. And as we're seeing right now is like unemployment is starting to tick up ever so slightly. It's not drastically coming up, But what you can see over the next 6 to 8 months is unemployment starting to tick up, and you start to see ISM like manufacturing and GDP might start coming down, and those are the things that I think will, because right now it's all good news when you see that happening at a slow pace, but when it gets to that point to where it is actual bad news, that's where I think the stock market could start to have realizations. But I do think a lot of this V shape, this 12% is due to everyone thinking, in 2022 interest rates, oh my God, they're gonna crash everything, nothing's gonna, and now people are starting to find hope. Now people are starting to feel like the economy can withhold the interest rate hikes and still continue to grow, and all these big tech companies with AI and stuff, they're all seeing that potential to have another expansion period. So there's a lot of hope with it. There's a lot of euphoric feeling that to the moon, and that's where it starts making me feel like when you see. So I kind of got into that because IWN, it's a Russell 2000. Those are small cap stocks. These stocks are typically hurt the most by interest rate hikes because most of them are not profitable and they're on borrowed debt. So with that stuff being said, like with borrowed debt and higher interest rates, then you have less cash flow coming to you. So that's why Russell 2000 stocks usually do pretty bad with in high interest rate environments. But usually I used IWM. There's a few different indices and tickers that you could trade to get to the Russell 2000. But IWM typically is like a risk on, risk off like indicator. So if you start seeing going up, stocks typically are having their risk on moments to where they start buying the smaller cap stocks. And I think that's kind of a reflection of people thinking that, interest rates aren't going any higher. They're only going to get lower. And then if we do acquire a soft landing, slowly but surely the Federal Reserve will probably cut as long as inflation is closer to the 2% goal. And you could see, that's in range as well, but these are pretty big ranges for the 4 hours, so you can continue to play these. And like towards the bottom of this is right when it seems like it pretty much capitulated because these volume spikes right here are massive. Like there wasn't volume like that hardly ever. And as you could see, like back in 2020 is the last time we had volume this high. So typically, when you start to see those, that's either a bottom or a top to most stocks. And when you see those very, very high volume pushes, it seems like smart money starting to get in. The big hedge funds that actually move stock prices starting to get in, and you've seen a solid support. Obviously, the sentiments is changing. Everyone thinks everything's going to the moon. So with putting two and two together, how I'm saying the Qs and the SPY and those things are getting top heavy. You see IWM, the Russell 2000s, not even barely off their bottoms of the year. So that's where I think there's a little bit of rotation possibly happening. People are going to start towards the end of the year, especially. There's like tax loss harvesting, and people need to show some losses on there. So they tend to sell, the things that are losers and stuff around October, November, and then they'll start buying things up. And it's like when you're starting to buy, you look at big tech, Nvidia, like they're all up here. Nvidia, Tesla's the only one that's not up there. You have Microsoft all-time highs, Apple, it's very close to all-time highs. It's like if you're looking at stocks, which one would you rather buy? Like a FUBU that's fucking all the way down here building a slight base. You know, I mean Nokia. I mean that's just a meme stock. GameStop is true, but I'm just saying with these small cap stocks, the one that's been on fire is fintech, like Square and Coinbase and all that stuff. Financial tech has definitely been on a tear lately, but these are kind of small cap stocks that I'm showing you is like they're all kind of having these V-shaped recoveries, and they're all towards their bottom. But when you look at the Mag 7, you look at Meta, Nvidia, they're all very close to all time highs. So it's like, I believe in my thesis that is why I'm starting to turn slightly bearish is that the Mag 7 is majority of where we've had this run up and hope. And I do think that some of there's got to be some profit taking once you start getting all time highs. But then what do you do with your money? You're usually going to throw it back into the market, and that's where I think the rotation comes from. QQQ, the spy, they're after resistances, and then you have the IWM pushing up. So over the course of the next few months, I feel like the one thing you can long is IWM, and then you could potentially short the Qs of the spy. And it's like I'm not, a financial advisor. I'm not held accountable for any losses or anything like that. But that's just more my speculation on where the market's heading. I think I think it's due for a slight pullback. There could be some buying in IWM, but I don't know. I don't know. I try not to get too biased, and Jimmy's always told me that is don't be so for sure, and that's how I've been playing it. I've been playing both sides still, but at some point the euphoria has got to like slow down, and I can't say for sure what happens in the economy, but it seems like when you look at history and what we've done with interest rates, something should start to crack. And from right now, my perspective, it doesn't seem like the Federal Reserve is gonna um, stop until something cracks. I don't think they're gonna start cutting just to look good about it, just to make people feel good and that everything's saved. I think they're gonna hold it high until things start to break. DraftKings, that was a nice one. Jimmy's been watching this one for a while. It fell out of this. It was in that little wedge, broke out, boom. Now it's good. You still have this little rising wedge right now on the 4 hour. So we'll see if it can continue that uptrend that it has going. I have quite a bit of lines there. I could probably delete this now that it broke above it. But that would be next point of support if it did break out of this rising wedge. It'd be about 35 bucks. It just keeps climbing though. I mean, that's a beautiful chart right there. You have this break of this base right here, builds a little base, breaks above, retest it, retest it again, boom, it's gone. It built that support there. So now it's like when price gets back down to 25, 26, that's potentially 6 a.m. It's time to wake up. It's potentially a point of support now, a point of accumulation and support resistance, that type of situation. So you need to always watch that, especially with newer stocks like DraftKings. Came out in 2020, so it doesn't have very many support resistance points. But in the long term, let's go a month or something, you could start to maybe see a little something. I don't know. It looks like a pretty solid chart. I'm not gonna lie. Like you have the bottom here, and it looks like it's climbing. So maybe you do start to see it go up towards 60. I don't know. Jimmy's been eyeing this one for a while, and he's definitely was on point with that because he was calling it at like 25s. I think it's damn near 100%, 75% since he's called it out. Hood, yeah, I'm good. I'm good at Robert Hood. I'll never buy that. Altria, this is like the tobacco company. I'm pretty sure they seem like they've been selling off. I don't know why. I'm just kind of like looking around, seeing what's out there. I haven't been too focused on like one of each stock, as you know. Like I usually watch big tech, so like I'll do the Apples, the Netflix, the Nvidias, Tesla, QQQ. That's typically what I'm trading, but it's like I obviously watch some of these because you got to start to see if there is, momentum in a certain industry and how it's been affected. Trade desk, I don't even know what that is, honestly. I think Jimmy had told me something about it. Yeah, Walmart, that's retail. They had a forecast with weakening consumer demand. So they're starting to see slight deflation in their prices because now that they're seeing that the consumer can't handle, how much they were charging for everything, they got to start bringing things down. So there's a deflation in price due to consumer weakening demand. Those are kind of signs that I'm speaking of in the economy. Is that like they're not quite blat- 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 blatantly obvious, but it is slightly happening in the slowest of moments. So that's kind of where I'm a little like sketched out about going all in on stocks right now, especially near all-time highs. Netflix, have a solid resistance around 484. They're still working their way up to that all-time high. This run that they've had has been pretty remarkable. I mean, you could see how straight up it's been since. Like that increase is just crazy from the bottom. Everyone capitulated, got rid of it. Now there's been a run up of 195%. It's like it's just insane. And that goes back to what Jimmy was saying in the Discord the other day, is that there's just so much liquidity in the system that he doesn't see. There was lows in 2022. He doesn't see those coming back ever again. It was October of 2022, I believe. And there was lows in the QQQs and the SPY that I was speaking of, like I wish I would have bought type situation. And this is the areas that we're talking about. Is like the Qs is at 250. Now it's almost at 400. The SPY was at 350. Now it's at 450. $100 more. And it's possible, we never do see these again, but you never know. You never know. And we will just have to wait and see. But he could be correct. With all the liquidity that was injected, we may never see these prices again. And it's like, that's why I missed it. But now I'm going to preach that when you see the market down 10-20% to a drastic measure like that, it's typically where you want to be buying no matter what type of news or articles are coming out, because you could have sworn the world was going to end towards the 2022 bottoms. You thought, everything was just going to shit. Nothing was ever going to be the same again. So they do a good job at fear mongering and scaring you out of shares, because then they can buy down here. They can get the cheapest price, have retail run it up, and then capitulate on you guys again. It's like rinse and repeat. Smart money versus dumb money. And we like to try and be smart. That's why we're called the Wise Wealth Discord. So this this video is a little different. Obviously, I don't usually go more in depth about the economy and stuff, but it is also a big part, sentiment in the market. You kind of got to get a feel for where we're at. And right now, we've been on a euphoric run. Sentiment is bullish, and that's kind of like a good thing to notice when it comes to trend lines and things like that. Is that right now everything's bullish, and that's kind of how you should be trading and maintaining your positions until sentiment starts to change, unemployment starts going up, whatever it is, where you could start to feel that people are starting to feel fear. And um, towards the lows in that 10% correction, our our fear and greed index was at extreme fear, right around here. So when it gets to extreme fear and you see 10% corrections happening while bullish seasonality comes around with November, that kind of gives you, you know, a feel for what sentiments is and what it's going to be. And then once November started, you could feel sentiment start to change. People were getting more and more optimistic, and then all we needed was the Federal Reserve to pause and then sound a little dovish, and that's exactly what happened. And now there's this meteoric rise. So I just explained the backstory kind of, because that's often not talked about with Jimmy and I. We usually break it down just to charts, supply and demand zones. But there is also like an extra added like sentiment feel and understanding for the emotions that people are having in the market, the reasons as to why the market is continuing to go up. Because we could show you that the market's going up, or we could show you that it's coming down based off supply and demand, but there's also usually a news article or a feeling, a sentiment. There's the right now the thing is the Federal Reserve, their decision to not raise interest rates, and the economy is still kind of firing on all cylinders. So they're seeing they're seeing inflation come down, they're seeing the economy stay up, and stocks are starting to look good because of that result. Because now people are like, oh, did the Federal Reserve do a soft landing? Did they get it? AMD still looking very, very strong. The meteoric rise off of that little cup and handle that we were preaching. Look at that monthly green candle, man. That is a very bullish sign. I do like Jimmy said he picked up some commons. You get this above, 130, you're looking at all-time highs. And this push right here is huge. That's a pretty big push in the upside. They had a decent resistance right here in the shorter time frames. That's why that's there. But that's a textbook cup and handle. I mean, I think the weekly shows a little better. But we've been plotting that cup and handle for a while. And you could see the handle just coiling up. Boom, it popped. It hasn't really stopped since. That's why we draw these charts for you guys to wait for these breaks or denials or whatever they are. It breaks out, it retests it perfectly, and it just goes. And it's like those are doesn't happen all the time. It's not always a perfect technical analysis. Hedge funds know exactly who's putting in money. So if the trade gets too um, one-sided, the MMs will switch it really quick on you. The market makers. So yeah, I mean, I didn't really go too in depth on stocks. Like I said, they're kind of all in the same spot. I just kind of gave you my backstory and my reasoning as to how I view the market right now. It's undoubtedly bullish. I think it's like a cautious bullish. Don't think it's like everything. We're all in the clear. Everything's okay to take off. There are some things that can happen that can get it to that point where we continue to take off. We have CPI, I think December 12th, I believe, of next week. Yeah, December 12th. Next week, CPI will be huge. Unemployment this week will be huge. You have PMI, factory orders. Those would be big. So it's like if we continue high on those and we see CPI on the 12th come down drastically, then you could start to, buckle up and rocket ship all the way to all time highs. But I am cautiously optimistic about the market right now. That's kind of my feeling on it. Is like I'm optimistic. It's obviously bullish. The Federal Reserve is paused and probably won't raise rates again, but we need to have the data to back it up. And that's pretty much most of what I had to say. The stocks, I mean, they're all pretty much in the same spot as last week. The one call I did have was Microsoft. I was plotting their rising wedge for a while. It broke out, retested it, still continuing to fall. Pre-market right now, we're down about 0.40%. IWM is up. So this is kind of the rotation that I'm speaking of. Jimmy brought it up too. As you can see, Friday we had 2.9% positive on Russell 2000, but Dick Hughes was only 0.29. So that's a huge difference. That's a 2% difference in advancement versus falling. The SPY's down, the Qs are down in pre-market, but IWM is up. So I still do see signs of rotation because you're going to want to buy the lower beat up IWM stocks, and then you're going to want to start to sell some of the Apples and Microsofts and Nvidias that are near all-time highs. So that's pretty much all I wanted to tell you guys. We'll obviously keep you updated on breaks and news and all that fun stuff throughout the week.